Good morning. Excuse me. Good morning, good afternoon, good evening, depending on where you're connecting from. You're welcome to today's live stream. If you can hear me, please confirm. You can hear me loud and clear. Also confirm you can see my screen. Confirm you can hear me loud and clear. Also confirm you can see my screen. How's been trading this week? I hope it's been profitable. I hope your week has been profitable. You have any question or any pair you want me to analyze? Drop it in the comment section. If there is any question you have or there is any pair you want to analyze, let me know in the comment section. All right. Thank you, Luca. Good morning. Okay, so we'll start by looking at the calendar for today. Today is 19th of February 2026, and we have just three major news. Two from Australia, one from the United States, and one from New Zealand. Australia has released its employment change and unemployment data. Employment change was negative, and unemployment rate was releasing unemployment claims. And by 11, the governor of New Zealand Bank will be speaking by 11 p.m. So we should expect high volatility on New Zealand pairs and United States dollar pairs. You guys can see what happened after FOMC meetings. Dollar gained value last night. News favored dollar. It was strongly bearish after the meeting. It was strongly bearish after the meeting. I think it was positive for the dollar. Okay. And tomorrow we have several major news for the dollar too. High impact news for the dollar, advanced GDP, core PC price index, flash manufacturing PMI, and flash PMI. These are high impact. So if you're trading the dollar today, you should be very conservative. You should be conservative. GBP retail sales will be released tomorrow. Euro also German flash manufacturing PMI, German flash services PMI, also GBP flash manufacturing PMI and flash services PMI will be released tomorrow. So you should expect high volatility in the market tomorrow. You should expect high volatility in the market tomorrow. Okay, so let's look at DXY and yen basket. So yen basket has been bearish. I shared this. That was on Monday. I told you I am bearish on yen, bearish, and I made so much profit through JPY and CHF JPY. I told you guys my focus this week will be on CHF JPY because there is no major news for CHF and also there is no major news for JPY. That's why I said I will focus on CHF JPY, and I made massive profits, over 100 pips on yen, on CHF JPY and GBP JPY. I'm out of the trade. I'm out trades on both pairs. Okay, so right now let's start with the daily, or let me start with the weekly time frame. So you can see so far this week, yen has been bearish. Yen has been bearish, and yen is likely coming to sweep this low. This really low. Yen is like coming to sweep down. Okay, it's likely low. Let's go down to daily. Coming for this related low. First, its first target is this fair value gap. The first target. I wouldn't advise that you buy yen now. You should wait for a reversal if you want to join the bearish move. Wait for a reversal. That is my advice. For a reversal. Okay, it might pull back to this support. You can see this support stone resistance. Okay, if I want to take any trade, if I want to sell yen, I would love to see it pull back to this. Love to join the sell on yen. Okay, wait for a reversal to this zone, supply zone or resistance or support stone resistance area before you look for sales. Okay, you can see that the shift in market structure occurred at this point. Shift in market structure occurred at this point. So we want to see price pull back to a premium area before selling. If we apply our Fibonacci from this swing high to this swing low, okay, price should pull back to at 50% level, 50% level before you sell yen. Okay, so that's my take on yen. I'm neutral on yen at the moment. I would only consider selling when it gets to 50% PB. That's when I will consider selling it. So on yen. I'm still very bearish on yen. Dollar index. If there's any pair you want me to analyze, please let me know in the comment section. Okay, dollar is bearish. Let me start with the daily time frame. You should look for sales. If you want to trade dollar today, it should be bearish. I told you guys that dollar most likely want to sweep the liquidity residing at the high of this candle because most retail traders would have executed sell after the formation of the shooting star, and that's what has played out. That is what has played out. They've swept the liquidity residing at this high. They also filled this fair value gap. Okay, so if you want to take any risks today on dollar, it should be sell. It should be sell. But I would love to see today's candle close bearish before going bearish on the dollar. I would love to see today's candle close bearish before going bearish on the dollar. So if I'm going to take any trade, if I'm going to sell dollar today, I'm going to risk less. I'm going to be very conservative. I'm going to closes bearish. That will be a strong confirmation to sell the dollar. Though on 4-hour, you can see we have bearish reversal pattern, confirm change in trend from bullish to bearish. Okay. You can see this is a valid reversal pattern. It's a valid bearish reversal pattern. We had a shooting star, we had a doji, then we have like an engulfing candle here. And also this pattern, you can see where this pattern formed. They formed at, I think we had a fair value gap here. You can see. So price came back to fill this fair value gap. So if you want to take any trade on dollar, it should be sell today. It should be sell. You can see we had an engulfing pattern here. Traders that executed sell after the formation of band, and where would they have their stop loss? Their stop loss residing at the high of this engulfing. So what they did was to come and sweep all the stop losses residing at this high and also use the opportunity to fill the fair value. So it's time for sell for US dollar. It's time for sell for US dollar. Sell US dollar today. Sell US dollar today. Sell US dollar today. Sell US dollar today. I hope that is clear. I hope that is clear. Okay. So let's see 1 hour. There should be a fair. So I would love to see a retracement. You can see this fair value gap is created here. I would love to see price come back here today. Okay, I'd love to see price come back here. You can see this. I see this high as a trap. This shooting star that formed there. You can see there was an attempt to fill this gap here. They didn't fill that gap. Didn't fill the gap. So a shooting star candle formed. What will most retail traders do? Most retail traders have executed sell, and their stop loss would be at the high of this shooting candle. So there's a high probability they will come and sweep this high and also fill this fair value gap before continuing with its bearish ride. So that's my expectation for the dollar today. I would love to see it pull back to sweep this liquidity before going bearish. I hope that is clear. I hope that is clear. If you have any question or any pair you want me to analyze, let me know in the comments section. So I am bearish on the dollar today. So let's go to the chart. So GBP USD, let's start with GBP USD. You can see GBP USD right now, I think is at a discount. Let me confirm that. Should be at a discount. GBP USD, you can see GBP USD is at discount. Is at a discount right now, and at a discount you don't sell. At discount you don't sell. You look for opportunity to buy at the discount. Okay. So like I said, if today's candle closes bullish, that will be a strong confirmation to buy GBP USD. If this candle closes bullish, it will be a strong confirmation to buy GBP USD. FOMC was used to sweep the liquidity residing at this low. The low of FOMC was used to sweep liquidity because most retail traders, if you go to 4 hour, after the formation of this armor, the most retail traders would have executed buy. Most retail traders would have executed buy, and their stop losses would be at this low. So FOMC, after FOMC, they swept the liquidity residing at this low. So if today's candle closes bullish, price already at the discount area, bias changes to bullish, you should buy GBP USD. Buy GBP USD. If not for the major news that we are expecting, I would have executed a buy trade on GBP USD and Euro USD. Okay, so on GBP USD, if you want to buy GBP USD today, you can see this fair value gap it has created. Wait for price to come back to fill this fair value gap. This is where you should be looking for your buys. If it does not play out today, if price does not pull back to this zone today, then it's likely going to pull back to this zone tomorrow. So you have to patiently wait for that to play out before you buy GBP USD. I hope that is clear. So my bias on GBP USD is bullish, 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 bullish. I'm going to tell you pairs I'm looking at today to trade. Towards the end of the class, I'm going to share with you the pairs, 2 pairs I'm considering trading today. I'm going to share that with you. Okay. So which other pair do you want me to analyze? Okay, Euro USD, the same thing, same bias. Euro USD and GBP USD are positively correlated. So if I'm looking for opportunity to buy Euro USD, I should also be looking for opportunity to buy GBP USD. So you can see price is at discount. You have no business selling at discount. Price is at a discount, so you should be looking for buy opportunity. Look for buy opportunity. Price is at a discount. Okay, price at a discount. So Euro USD, let's go to 15 minutes. Okay, so on Euro USD, where do we have a fair value gap? We have a fair value gap here. So we had this fair value gap here. Okay, we had this fair value gap here. Okay, it was filled at this point. You can see this gap got filled at this point, and you can see the pattern that formed here. This is an armor. This is an armor. So most retail traders would have bought after the formation of this pattern here. Most retail traders, and where would they have their stop loss? Their stop losses would be at this low. So I would love to see this low swept. Liquidity decided that this low should be swept before going bullish. Okay, so I want to see this low here. I want to see it swept before I will go bullish on Euro USD. That is my take on Euro USD. I am bullish on Euro USD. For those of you that have this software, you wait for the close today's candle. If today's candle closes and the bias changes to bullish, then you should go bullish on GBP USD and Euro USD tomorrow. But if you want to take this trade today, if you want to buy today, wait for price to pull back, sweep this liquidity, then before you buy. I hope that is clear. Same thing for GBP USD. Wait for price to pull back to this fair value gap before you buy. I hope that is clear. USD yen, USD yen. So you can see what do we have on USD yen daily. So I think US dollar JPY is getting set for sale. You can see it has pulled back. Okay, it almost filled this fair value gap. You can see it almost filled that fair value gap. So if today's candle closes bearish and the bias changes to bearish, we're going to sell USD JPY. We're going to sell USD JPY. Okay, so let's patiently wait for today's. You can see price is already at a premium area, and at the premium area, you are looking for opportunity to buy. At the premium area, you are looking for opportunity to buy. Okay, so if today's candle closes and the bias changes to bearish, we are going to sell. We are going to sell USD JPY tomorrow. We are going to sell USD JPY tomorrow. Okay, let's see H4. Let's see H1. Okay, let's see H15. If you want to risk selling USD JPY today, you can see it has created a fair value gap here. Okay, this is where you want to join the sell. Okay, we have this fair value gap also. So I would love to see price pull back to these zones before selling. Okay, before selling, I would like to see price pull back to these zones before taking a sell on USD JPY. I hope that is clear. It's a bearish. This is not the time to buy USD JPY. I gave a call on USD JPY, GBP JPY, and CHF JPY. That was on Monday or Tuesday. Congratulations to those who executed the trade, who took the trade. USD JPY did over 200 pips. USD JPY did over 200 pips. USD card also. Can you see the nice setup on USD card? Can you see the nice setup on USD card? I think it tested this resistance. You can see price pulled back to this. You can see resistance. Okay, almost hits that resistance level at this point. You can see that. So if today's candle closes bearish, I think price is at a premium now. Let's confirm. Let me confirm that price at a premium. It should be. Yes, yeah, you can see price is at a premium. So we should be looking for sales. Okay, so all we need to do is wait for this to change to maybe at the close of today. By the close of today's candle, buyers will change to bearish and you keep selling. Okay, the daily buyers, this buy was generated. This buy bullish buyers we have here was generated at this point. So this is where you should have bought. Those of you with the software, this is where you should have bought. Okay, and if you had bought over 100 pips, 100 pips, and I told you once the market has moved in one direction above 100 pips, you should not take the trade. You should not take the trade. That is not the trade you should be executing. So this is where you should have entered. So if you didn't buy from this, you cannot buy from this point. You cannot buy. Once it gets to 100, you wait for the buyers to change. Wait for the buyers to change to bearish before you sell. So if today's candle closes and buyers changes to bearish, you start selling. You sell. You have no business buying. Once this bias changes to bearish, every trade you're taking is sell, 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 sell. And if it's going to sell, it's likely going to come for it's likely going to come for this low. So you could patiently wait for the daily candles before you sell, or you can see the pattern we are having here. This might close as an engulfing pattern. If you decide you want to sell after the close of this engulfing pattern, let's say you want to risk $50 on this trade. If you want to risk $50 on this trade, you can risk $25. You can risk $25 on your first trade. Then if the bias changes to bearish, you risk the remaining $25. That is how I trade. That is how I manage my risk. Okay. Since the bias has not changed to bearish, if I decide to sell, I'm going to risk just 50% of my maximum daily drawdown. My maximum daily drawdown will risk 50% on the first trade, then wait for the bias to change to bearish, then I will risk the remaining 50%. I hope that is clear. So on USD card, okay, you can see it has created a fair value gap. A shift in market structure has occurred here. You can see the shift in market structure has occurred here. You can see that shift in market structure has occurred here. So, and it created a fair value gap. So you want to wait for price to pull back. This would be a very good zone to consider selling. Wait for price to pull back into this fair value gap before you sell. If you want to trade USD card today, wait for price to pull back into this zone before you sell. I hope that is clear. Mrs. Damilola, I hope you can hear me. You can hear me, Mrs. Damilola. Let's look at gold. Gold is set for buy. Gold is set for buy, 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 buy. I told you guys that once the daily candle closes bullish on gold, once the daily candle closes bullish on gold and the bias changes to bullish, you should buy gold. So I think gold is set for buy. Buy, buy. Technically, gold is set for buy. Technically, gold is set for buy. And I think gold is coming for this high. Gold is set for buy. It's coming for this high. Most likely, gold might come sweep these highs, but this will be the first target. I'm not sure it's going to do this week. It might not deliver this week. Okay, but today it might come for this high. It might come for this high. So if you're going to take a trade on gold, you buy from this point, you'll take profit. Your target, that's about 1,150 pips. If my profit target is 1,150 pips, I should be willing to risk at least 600 pips on gold. I should be willing to risk 600 pips if my profit target is 1,100 and something pips. Okay, so that's my take on gold. If the risk is too high for you, if 600 and something pips is too high, don't take the trade. Don't take the trade. Don't take the trade. You cannot be risking 50 pips. You cannot be risking 70, 100 pips on gold. If you are doing that, your stop loss will be used as liquidity. All the time, your stop loss will be used as liquidity. Okay, gold delivers, it does over 1,000 pips on a daily basis, so you cannot be using 50 pips, 30 pips as your stop loss. Okay, so that's my take on gold. Gold is bullish. Gold is going to buy from now to the close of the market. That is what I see gold doing. Buy, 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 buy. But this would have been a good entry for buy. 4 hour, if you go to 4 hour, you can see this would have been a good entry. This would have been a good entry. So if I'm going to long go to, pull back, at least gold should pull back to a discount area. I will not buy from the current market price. I would like to see gold pull back to a discount area before I will buy. Okay, I will not buy from the current market price. We have this fair value gap here, or this resistance don't support. This resistance don't support. Okay, this resistance don't support. I would love to see it come back and retest this broken resistance don't support. Okay, so I would not advise that you buy from the current market price. Wait for price to pull back to a discount area, at least 50% Fibonacci before you buy. That's my take on gold. Any question? Is there any other pair you want me to analyze? Okay, so I said I will share with you pairs that I'm considering trading today. Pairs that I'm considering trading today. For those of you that have the software, you should be looking at Australian CAD. Australian CAD. Why am I considering trading Australian CAD? Australian dollar CAD. So today there is no news for Australian dollar. The news for Australian dollar today has been released, and there is no news for CAD today and tomorrow. No news for CAD. Okay, so that is why I'm going for Australian dollar CAD. And what do we have here? You can see the bias is bearish and price is at premium. That is the reason I'm considering selling Australian dollar CAD. Australian dollar CAD. So I'll be selling Australian dollar CAD. Okay. If the current 4-hour candle closes shooting star, if it closes as a shooting star, you can start selling. You can see on 1 hour we already have engulfing pattern. We already have an engulfing pattern on 1 hour time frame, and there should be a shift in market structure on 15 minutes time frame. So you can see here we had a shooting star on 15 minutes time frame, engulfing pattern on 1 hour time frame. Yeah, this is an engulfing pattern. So if the current 4-hour candle closes as a shooting star, that will be a strong confirmation to sell Australian dollar CAD. That will be a strong confirmation. If this candle closes as a shooting star, it will be a strong confirmation to sell Australian dollar CAD. Okay, so it gives us a bearish signal. Price is at premium, and ATR half value is 37 pips, which means that before we sell, we expect price to do a reversal of at least 37 pips. So from the low, today's low to the high, I think it has done more than that. You can see it has done a reversal that is more than the ATR half value. This is the right time to look for sales. This is the right time to look for sales. Okay, so that is it. And if you are selling, your stop loss should be 50 pips. Take profit should be 100 pips. If you are selling Australian dollar CAD, your stop loss should be 50 pips and your take profit should be 100 pips. Okay, your stop loss should be 50 pips and your take profit should be 100 pips at least. Then the next pair I'm looking at is Euro Australian dollar. Euro Australian dollar, you can see bias is bullish, price is at discount. Bias is bullish, price is at what? Discount. So we should be looking for buy. Buy. If the current 4-hour candle closes as an hammer, if it closes as an hammer, you could risk buying. Remember, yesterday or 2 days ago, I told you Euro Australian dollar is coming to fill this fair value gap. I mentioned this yesterday. Yeah, you can see it has pulled back to fill that fair value gap. I mentioned this yesterday or 2 days ago, that it's going to come fill this fair value gap, and that has been accomplished. it has been accomplished. So if the current 4-hour candle closes as an hammer, you want to risk buying euro Australian dollar. Those are the two pairs I would be trading today. Those are the two pairs I'll be trading today. I will be looking at USD pairs tomorrow. After the close of today's candle, that's when I'll be considering trading on US dollar pairs. Okay. Any question? You have any question? Any pair you want me to analyze? Let me know. Let's see what's happening on 1 hour. So we have a spinning bottom on 1 hour time frame. Let's see 15 minutes time frame. We had a shooting star here. You can see shooting star on 15 minutes time frame. 1 hour spinning bottom, 15 minutes. We have a shooting star here. So, any question? Is there any other pair you want me to analyze? I gave a call on CHF JPY, buy CHF JPY. If you had bought CHF JPY at the time I gave the call, you would have made so much profit. You would have made so much profit. And this is not the right time to buy. It's late. Okay, you can see the buyers gave us a signal, bullish signal. Please, can you all hear me? Others can hear me. Please confirm you all can hear me. If you can't hear me, Mrs. Damlola, it means the issue is from your hand. Can others hear me? Can others hear me? I believe others can hear me. If you can't hear me, it means the issue is from your hand, not from my side. Can others hear me? Please, if you can hear me, drop a comment. I believe others can hear me. Okay, so give us the bullish bias after the formation of these candles here. So this is not the right time to. So if you look at CHF JPY now has filled, you can see it has filled. You can see CHF JPY has filled this fair value gap. It has filled this fair value gap. So you should be looking for sell opportunity on CHF JPY. You should be looking for sell opportunity on CHF JPY. Okay, if today's candle closes bearish and our bias changes to bearish, we'll keep selling. We'll keep selling. We'll keep selling. Every other person can hear me, so I think the issue is from your end, Mrs. Damlola. Okay, thank you, Mr. Sam. Thank you. So if today's candle closes bearish, if it closes bearish and the bias changes to bearish, sell CHF JPY. Sell CHF JPY. Sell CHF JPY. If the bias changes to bearish. I hope that is clear. I hope that is clear. Any question, any question, any question? Okay, Ebuka, let me attend to your question on risk and money management. If you're trading with maybe $50, what lot size should you apply? What lot size should you apply if you trade with 50 between 30 and $50? For me to tell you the lot size you should trade with, I need to know the market risk on every trade you execute. What is the market risk? I always advise that your risk on any trade should not exceed 2%. 2% of your capital. Your risk should not exceed 2% of your capital. So let me say you have $30. If you have $30, 2% of $30 is how much? 2% of $30. Let me say calculate. Let me get the calculator. 2% of $30 is how much? 2% is 0.02 times. Let me just use $30. Let me just use $30 example. Okay, so it means on every trade, you shouldn't risk more than on every trade. On every trade, you shouldn't risk more than 60 cents. 60 cents. Okay? 60 cents. You shouldn't risk more than 60 cents. So what is the market risk on every trade you execute? What is the market risk? For example, I always love to use 50 pips, 50 pips as my market risk, 50 pips. Okay, so this is what will determine the lot size you have to trade with. And this market risk changes. It won't always be 50 pips. It changes. Okay, so it's the market risk that will determine the lot size. So if I'm not willing to lose 60 cents on every trade, it means I will have to divide this 60 cents, 0.60 divide 50. Okay, 0.60 divide 50. 0.60 divide 50. That is 0.01. Okay, 0.012. Let's say 0.01 multiply 0.1. That will give you the lot size. Multiply 0.1 multiply 0.1. So the lot size here, the lot size here should be 0.1. Okay, 0.1 for cent account. For cent account should be 0.1 for cent account. Cent account should be 0.1 lot size. 0.1 lot size for cent account. Cent account is 0.1 lot size. I hope that is clear. 0.1 lot size. If your market risk is 50 pips, you should use 0.1. If the market risk is 100, you use 0.5, 0.05, sorry, 0.05 lot size. That is what you should apply. I hope that is clear for cent account. If you're operating between $30, $50, you should be operating a cent account. Should be operating a cent account. If you operate a normal standard account, you'll be risking more than 2% of your capital. You'll be risking close to 10% of your capital on every trade. Close to 10%, which is too high. Which is too high. So if your capital is not up to 100, even $100, you're supposed to be operating a cent. You're supposed to be operating a cent account. So if your capital is not up to, let's say 200, 300, you should be on cent. You should be on cent. Any question? I think that will be all for today's class. Any question, any question, any question, any question. Please ensure you apply proper risk and money management. Always use stop loss on all your trade if you don't want to blow your funds. If you don't want to blow your funds, always use stop loss. Always said it. Before you enter a trade, if you cannot define the risk on that trade, don't enter the trade, don't execute the trade. If you don't know where you're going to set your stop loss on that trade, don't execute the trade. If you execute the trade, you would be gambling and you will definitely lose. You will definitely lose. Gamblers don't make money in this business. You must know your stop loss level before you execute the trade. Trading is not gambling. Trading is not gambling. Know the dollar amount you're going to lose on that trade. How much you're going to lose, you should define that before you execute the trade. Trading is not guesswork. It's not guesswork. It's not guesswork. Please give the video a thumbs up if you haven't done that. Give the video a thumbs up, and if it's your first time joining the live stream, please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. And if you're interested in getting this ultimate signal software, send me a message on WhatsApp. 1 month subscription goes for $20. 3 month subscription goes for just $50. This offer is for a limited time. It's for a limited time. Few months now, a few weeks from now, we're going to increase the price. So get it now that is cheap and affordable. Get it now that is cheap and affordable. I think last month, 2 months subscription was $30. 2 months subscription was $30, but now it has increased. So get it now that it's very cheap and affordable. Thank you very much for your participation. Since there are no more questions, I have no choice than to end the class. I wish you all a profitable trading day. Bye for now.